Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways by taking only high probability and low risk trades that have maximum forces from the market, sector industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas I shared recently before knowing the results as usual. I will explain how I took them, if I took them, and how I am managing them. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade Monday. You could trade them on Friday near the close as well if you could find them in real time using Q systems. Anyone could. How to know the market is weak even when NASDAQ 100 makes a new all-time high, and how to trade a market like that. It is not uncommon for the market indexes to be out of sync with the broader market from time to time. Recently, that divergence has magnified considerably. QQQ or NDX made new all-time high this week. So did SPY, SPX. But the broad market is rather weak. Throughout today's session, I will show this to be the case using multidimensional analysis, not only technical but different angles of looking at the market. I will also show how a broadly strong market looks like. That is not USA market today, but I will show how a broadly strong market looks like using live analytics. That is true for a global market at present. If you know that how it looks, then you will be able to recognize when the USA market becomes broadly strong. Knowing such insights is useful in deciding your preferred trading direction. But that is not all. It is also helpful in deciding what kind of stocks to buy. The ones at the top, usually the high growth stocks, or the ones at a lower level, usually undervalued stocks. It also helps you in deciding instrument strategy. At the very top, the stocks that are at the very top, you may not like to short naked put on them. Whereas for stocks at a very low price that are starting to go up, naked short put or short put vertical may be a very viable strategy. So that is another thing that you can decide knowing about broad market strength. In such a market where NASDAQ 100 is making new all-time high but the broad market seems to be weak, we'll confirm that soon. If that is the case, how to trade such a market? One way is to buy the stocks that are already at the top. Those are current leaders, of course, because these stocks are at the top, like the mega caps. Those are also most likely overbought, and the stop loss is far away. Some people must be buying them, that's why they are going up, but I usually avoid chasing such stocks. A second way is to find beaten down but fundamentally strong stocks at a lower price point and buy them when they start to go up with a low risk entry point. I buy such stocks all the time. Yet another way is to buy stocks that are now in the stage 2 uptrend. They have already created a bottom, come up, and they are in stage 2 uptrend with higher high, higher low. Buy them with a low risk entry point. I buy such stocks all the time. Key requirement, if you notice what kind of stocks I am trading, key requirement in my buying is to minimize risk first, and only after that I try to maximize profit. Stock selection is tied to that priority. What priority? To minimize risk. And instrument choice is also tied to the same priority of minimizing risk. Let's see how these concepts are applicable in today's market. Greetings. I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets using only one trading system that I developed, Q trading systems, and its accompanying techniques. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and this YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. The Q systems run on Metastock and TradeStation platforms. They have multiple components. I will use many of them in today's session. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, does not have to be, but it can be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. Let's continue with today's market recap. Let's first look back at two stocks that I shared in the last market recap. I shared only two stocks, potential buying ideas. Let's look at them first. I saved the two stocks on the sidebar last week. One was APTV. It created a very nice base in the longer term weekly interval, and it was trying to create a false downside breakout in weekly. In daily, I noted at that time that there are several trendline resistances, and I would keep an eye how and if I could buy it. I did not buy the stock. I identified it 1 week ago. This week was a 4 trading day week, so I identified it as a possible headwind reversal candidate. However, very next day it fell down and then it could not break above the trendline resistance, so I did not buy the stock. I am continuing to watch this stock. If the trendline resistance is broken and if I get a low risk entry point, then I'd like to buy the stock. If you remember, APTV did not pay a high dividend yield, probably no dividend yield, so I would not like to hurry into a position without the safety cushion of dividend yield. I did not buy it. Whereas the other stock that I shared in the last market recap was Vodafone. That was also a headwind candidate. Last week's theme was headwind, probably, isn't it? That also had a trendline resistance, and I mentioned that I could look for a trendline breakout or I could buy it based on its high dividend yield. I did not buy it when next trading day it came down, but I bought it right on the day it created a bullish shaped candle at the trendline support. If you are following Q systems or using it, then you know these trendline supports work very well. It's a fundamentally strong stock using vital scorecard, very high dividend yield. So I bought it right on this day, and now it has gone up. Now it has broken the trendline resistance. What I anticipated happened, but I bought it before the trendline resistance broke using trendline support, and I used the safety net of its high dividend yield. In fact, buy now, if you see, this was my buying price, slightly better than that. Stop would be below that candle's low, and at the high of Friday, it almost or more than covered the risk distance. One could book at least partial profit in the trade if one wanted, but I did not. I am holding the full long position in Vodafone. VOD is Vodafone. And how to decide whether to book partial profit or book full position profit or hold full position. One thing I will say that there is absolutely no harm in booking partial profit once the risk distance is covered, because the mathematics works for us. The mathematics of swing trading profitably is actually on my website superiorprofit.co. This website, if you go to philosophy page, the swing trading profitably philosophy is there based on which I trade, and that states once the risk distance is covered, it is absolutely okay to book at least partial profit. In this case, I did not. The answer of why I did not book profit will come if I look at the complete analysis of Vodafone again. Technically, it already broke out of trendline resistance, did exactly what I expected. The headwind signal worked again. Notice the vital scorecard. More than 10% dividend yield. I already knew that. I already shared that. Undervalued. Already knew that. Already shared that. And notice on Friday, 67% of peer stocks went up. Notice over 1 day, 2 day, 5 day, the stock is steadily going up. And if I check its relative industry score, in terms of strength, wireless telecom services is one of the strongest, top 20%. Even in terms of acceleration, it is among the top 20%. Industry is strong and accelerating, fundamentally strong stock, undervalued, and with high dividend yield, technically just completed a breakout. Weekly is having support. This is also one pattern I often mention as one of the strongest patterns in technical analysis. Stock holding long-term support for 4 weeks in a row and then breaking out of trendline resistance in daily. So long-term trendline support breakout in shorter term daily, those are some of the strongest technical buy patterns. On top of that, I have a bullish flow on Friday. On top of that, the price regained the yellow direction line. On top of that, it had a gap up open on Friday. So many things are working in its favor that I decided not to book even partial profit. I am holding the full position. So let's remove Vodafone but keep APTV. I will continue to watch it in the coming week. Now about today's theme. NASDAQ 100 made all-time high. Let's look at QQQ, that is NASDAQ 100 ETF. Very bullish weekly, very bullish daily. There is no other way of putting it. Bullish, but for me, for Q technique, it is overbought, so I would not like to buy now. I did have concern about the bearish headwind and the bearish indecision cluster in weekly, bearish headwind in daily. However, I also noted there were too many supports. Unless those supports were broken, it was not a time to take short trade. So that protected me and other Q traders. We would not short QQQ. We would note the bearish headwinds, and I am still noting the bearish headwind in mine, but it went up. It is bullish and overbought. The theme of today's session is, yes, QQQ is super strong, but why so? Let's look at the breadth, advanced decline breadth of QQQ. And to save time, I have captured some snapshots, and also sometimes during weekend I have difficulty connecting with Refinitiv. So this is NDX or QQQ's advanced decline breadth 1 month to 1 day. What it is telling is it is steady. Whether we look at 1 month on the right or 1 day on the left, it is remaining bullish, if anything slightly getting stronger, steadily going up. So QQQ is strong, and NASDAQ 100 internally is also strong. Now, mega caps have tremendous influence on QQQ, and several of the mega caps made a new all-time high. Let's look at them. Then we will understand why QQQ is super strong currently. Last week it was the strongest of the market ETFs. Apple, one of the mega caps that made a new all-time high. Why am I looking at the mega caps? For two reasons. One is to ascertain why NASDAQ 100 is strong, and later on we'll see broad market is not that strong, and also to find out, is there any buy setup in the strongest mega caps. Apple is super strong, there is no other way to put it, but it is far above the upper boundary. It's even hitting jump thrust high. That's never a place where I like to buy a stock. And if you follow Dr. Jeffrey, thanks to him, some of these concepts I adopted from him, many of these concepts in Q systems and techniques. So if a stock is hitting jump thrust high, it is not only overbought, it is too extended that this upside momentum is unlikely to continue. That does not mean it has a short setup, but I am never going to buy a stock that is at jump thrust high. So no buy setup, though it made a new all-time high. Next one, Amazon, next mega cap that made a new all-time high is Amazon. Also strong, but if you remember the picture we saw of Apple just now, it is not as strong as that. Daily is actually yellow, but still it is bullish and above upper boundary, not a place I'd like to buy. Next mega cap that made a new all-time high, Google, super strong again. And Friday's candle is very strong. Now note the Friday's move. Friday's move, most of the mega caps that made new all-time high had a sharp rally upwards on Friday. Google is one of them. Bullish, no doubt. I will not buy because for me it is overbought. Meta, most of the weeklies move. The weekly is super strong, daily is super strong. Most of the week's move came from Friday. That is one thing that I observed. Bullish but overbought, not going to buy. Microsoft, the fifth mega cap that made a new all-time high. Super strong in weekly and daily both. Bullish, no doubt, but overbought, not going to buy. Netflix, the last one of the mega caps that made new all-time high. This is not as bullish as the others, isn't it? Weekly closed just at the watermark resistance created by previous week's candle. Had a bearish shadowing in weekly and daily both. And I shared in the last market recap that was here using the bearish shadowing in anticipation. And I always say, though I do trade sometimes in anticipation, that's not a good idea. In anticipation of a trend line breakdown, I took a short trade, bearish trade in Netflix. The Q guidelines is to wait for the breakdown, but the breakdown did not happen. But if you remember my last week's market recap, when I do trade such in anticipation trades before confirmation, I am extra cautious. So what did I mention in the last market recap? That I traded a very small position to test it out. And if it broke, I could add to my position. But it did not break the trend line support. I did not add to my position. I am holding my position. So I reduced size because it was not a Q setup. Another thing I did. Remember, I mentioned the instrument choice is decided by where the stock is or the market is. Both we look at. The instrument choice I consciously made of short call vertical. Therefore, I am in the trade, and if it comes down little bit now, maybe one or two candles, I'll actually be in profit because time decay will be in my favor. So I made two conscious decisions knowing that it was not a proper Q trade setup. One was to reduce size, take an exploratory position. Another was to use short call vertical, so I would not need to get stopped out by a sudden up move, and also time decay would be in my favor. If you see these mega caps that made new all-time high in this week through the finder weekly, you would notice that not only the technical chart of Netflix is weakest, for the week it had the smallest gain. So at least my choice of shorting Netflix and not the other mega caps was accurate, but I was still, I have to admit with all candidness that I took the trade in anticipation. I mentioned that in the last market recap. I am holding that exploratory smaller position. So let's keep tracking that. Now the trade may end up making a profit, isn't it? However, that does not change the fact that Q guidelines is not to take a short position, bearish position when there is a trend line support nearby. Over longer term, those may provide excitement like it did to me in this case, small position, but they don't add to our overall profitability. So I will repeat, if it is not a Q trade setup, I may take it sometimes for excitement. I reduce position, but overall, over hundreds of such non-Q trades, they do not add to my profit. That's something I always keep in mind. Maybe one day I should stop trading them instead of just reducing size and using short verticals as instruments. Maybe someday. Well, so what we saw is that QQQ is very strong. We could find the reason from several megacaps making new all-time high, and on Friday some of them went up very sharply. How is the megacap custom index? Let's look at that. Super strong weekly. Megacap chart this week is very similar to QQ chart this week. We again understand why QQQ is super strong, and the trend line supports did not break. It will be quite significant, I think, if and when this trend line supports break. But when it will break, we don't know. I will keep watching for that. Let's sidetrack little bit because I see dollar index is here. That is one instrument I always keep an eye on. And let's look back and see how the Q analysis and specifically the trend lines work once again. When we were somewhere here, I mentioned that we may calm down, but it will be difficult for dollar index to break through all the trend line supports. That came true. That was a profitable analysis. It went up, and like a clockwork, it stopped right at the trend line resistance. And yes, there were news like central bank leaders, Fed heads might have talked something, but it seems on the other hand that the trend line supports which were already there, trend line resistances which were already there, were also acting almost miraculously, one may say. So from trend line resistance it came down. Now it is somewhere in the middle of the sideways range. If it comes down little bit, I will continue to have the view that I had when dollar index was here, that it will be difficult for dollar index to simply come from the upper edge of sideways range and easily break through the lower edge of the sideways range, because there are many trend line resistance at the lower edge. And if I clear the lines, there is also the white direction line. There is also watermark support. It will be difficult. Nothing is impossible technically, but it will be very difficult. It has not happened again. So I will expect it to stabilize here or maybe bounce up little bit. That may put pressure on the market. That in last 4 days, this week had 4 trading days, that dollar index came down right from the trend line resistance for 4 days in a row. It seemed to have helped the mega caps. They all rallied, but the broad market did not. That is somewhat okay. Let me rephrase it. The broad market did improve, but it did not improve so much as one would expect from this decline in dollar index. I'll repeat that. Dollar index came down, mega caps rallied. That was something that we would expect. Broad market improved, but not so much. So let's see if broad market improves in the coming days. We will get some signal about that from multiple Q angles. So that was a diversion to dollar index because I saw the dollar index chart was there. I was looking at it earlier. Let's continue with a look at the other market ETFs. QQQ we looked at, mega caps we looked at. Let's look at the other market ETFs. DIA. It's not so strong like QQQ, isn't it? Didn't make a new all-time high. It's inside a range, right in the middle of the range. Though it broke the trend line resistance, it's practically moving inside a congestion area. It is underperforming the market seen from the relative performance line tilting down. So I will not like to buy or short an instrument that is in the middle of a sideways range. Not so strong. What about the internal breadth of dia? Let's look at that. To save time, I snapped that picture. Advanced decline breadth of Dow Jones Industrials, and created all these snapshots using Q index just a while ago. 1 month is bearish, but 5-day is bullish. 1 day is also bullish. Remember what I mentioned? Mega caps rallied a lot as dollar index came down for 4 trading days. 4 trading days in this week. And I mentioned the broad market improved, and we can see the improvement here. It's not hugely bullish, but the breadth improved from 1 month to 5-day to 1 day. So we could start to look at buying candidates, and I did that last week. I mentioned I bought Vodafone. I'm watching the other stock. Breadth improved for Dia, but not as strong as QQQ. What about SPY? This is also very bullish and overbought, similar to QQQ. This is also hugely influenced by the mega caps. It is approaching jump thrust high. Overbought, unsustainably overbought. I'm not going to buy, but it is bullish. But is the bullishness only from the mega caps? We will know that from the internal breadth. This is SPX index breadth. 1 month is bearish, 5-day is bearish, 1 day is also bearish. So this analytics is showing clearly that though QQQ and SPY made new all-time high, and yes, QQQ breadth was bullish, so probably the mega caps, tech mega caps pulled up some of the QQQ constituents also, enough to turn QQQ advanced decline breadth bullish, but it could not do so for SPX, which is a broader 500 stocks index. The breadth remain weak. But again, if you notice, from 1 month 59% down to 5-day 57% down. So breadth improved little bit, and then over 1 day it is 52% down. So breadth improved. That's what I mentioned, again repeating that broad market breadth is remaining bearish, but it improved, and that means some stocks are starting to go up, like Vodafone, like some other stocks I bought earlier. I shared them in previous market. I'm still holding some of them. I booked partial profit. So those stocks are starting to come up, and I could and you could identify them at the perfect low risk entry point. So again, anyway, SPX breadth is not so bullish as the index chart itself is showing us. And Russell 2000, let's look at that, the last market recap, market ETF. Not bullish at all. In fact, this is the only market ETF that is down for the week, that is down on Friday. Remember, when IWM was going up here, I mentioned that it was right in the middle of the sideways range. That is a no trading area, and I was not going to buy, even though here, at least for these 3 days, IWM was going up quite strongly. And that concept, that when an instrument is inside a range and right in the middle of it, avoid buying or shorting, that concept helps a lot. What does it mean helps a lot? It adds to our profitability over time. When an instrument is in a sideways range, we don't trade. When it is right in the middle of the range, what do? We short the top of the range, we try to buy the lower edge of the range. That is what adds to our profitability one time. So I followed that techniques here and it saved me from buying IWM. IWM is the worst performing market ETF. And what about its breadth? Again, let's look at Q index. 1 month bearish, 5-day bearish, 1-day bearish. But if we look at least from 1 month period to 5-day period, both are bearish, but from 66% down, it became 58% down. It improved. On Friday, it reduced again 69% down. We'll have to see if the breadth can improve next week. If it does, then we may have some small cap stocks that are at lucrative buy points. QQQ is super strong, strongest of the market ETFs. Is that strength present in let's try to open the weekly daily for NASDAQ composite, not NASDAQ 100, the narrower index, but NASDAQ composite. Here, the reason, one of the reasons I love to use MetaStock, other than its simplicity, is that it allows me to look at any instrument in any country, index, future, forex, any country in the world. So this is NASDAQ composite, also super strong. And notice NASDAQ composite, a very broad index, is looking very similar to QQQ. Why so? The answer is very simple. We saw that overall breadth is not very strong other than QQQ, right? NASDAQ 100. But if we look at the NASDAQ composite, very broad index, its candle chart is looking very bullish, so much so that it is hitting jump thrust high. Why so? Because this is also market cap weighted, meaning those handful of mega caps are having a tremendous influence on this as well. That's why the candle chart is looking like this. What it also means that if we just look at candle charts, even of the composites, very broad indexes, that will not show us the clear picture. We need to drill down into other market insights like we did with Q index. And if we did that for the major markets, why not we look at NASDAQ composite breadth? We just saw the NASDAQ composite chart made new all-time high again. But what is the breadth saying? 1 month bearish, 5-day bearish, 1-day bearish. The bullishness of the candle chart is nowhere to be seen in the overall breadth, very broad index. 3,323 stocks perfectly captured from Refinitiv. Bearish. Broad market bearish, only mega caps are up. Again though, we see the same thing. 1 month 63% down, 5-day 55% down, 1-day 53% down. It is still bearish, but breadth is improving. Bearishness reducing means bullishness improving. That means some stocks are starting to go up that are non-mega caps. Some I traded, some I shared, some we may find today, some you may find on your own. If we looked at this broad composite IXIC, why not we look at New York NYSE, not New York Stock Exchange. Okay. Sometimes during market recovery, Metastack may crash. I am running many programs, including streaming software. Let me reopen Metastock. I actually take these interruptions, unintended interruptions, of course, to have a sip of my coffee that I have with me. And this is New York Composite. And why I am going through all these a bit in a bit more detail this week is, see, there are many insights to be gathered. When we look at everything, put it together in our mind, we realize something. What we see here, this is New York Composite, a very broad index, again like NASDAQ Composite, but this is not bullish, did not make a new all-time high, moving very sideways, looking more like Dia. This is also market cap weighted, but there are less technology related stocks. So when I put all of them together, but okay, let me come to one more thing. When we look at the NYSE composite chart versus NASDAQ composite chart, NASDAQ is much more bullish because it is even more influenced by market mega cap stocks, high mega cap stocks. But let's look at the Q index breadth for New York Stock Exchange Composite. Again, a very broad index, 1903 stocks. 1 month bearish, 5-day bearish, 1 day bearish. From 1 month to 5 day, it improved a bit. From 5 day to 1 day, it deteriorated. It's looking very similar to Russell 2000 in breadth plot. At least 1 month to 5 day, it improved. We'll have to see if next week it can improve again. That will be a reason to look for stocks that are fundamentally strong, beaten down at a low risk buy point. We looked at breadth and we noticed that on Friday the market was super strong. Let me close this. On Friday we noted market index, especially QQQ SPY, were super strong, but on Friday in real time, could we see that strength in broad market? The answer will be no, because I also have, and you have if you are using Q, access to the intraday breadth. I have few more charts, but this is about NASDAQ composite and NYSE composite. I will not go through all the plots, but notice that NASDAQ composite advanced decline actually started below the zero line, this line, and it remained below zero throughout the day. Whereas the QQQR index itself had a up move at the open and continued to rally. This is showing broad market that is weak. This is showing mega caps pushing index higher. And interestingly, I noticed the volume increased throughout the day. So that could be interpreted as the mega caps and few other QQQ constituents that went up, they were going up with higher volume than the ones that were down. But still the fact remains that most of the stocks are down actually. Advanced decline is down at the close as well. Throughout the day it was close. Broad market was weak on Friday. A super rally day for the mega caps. Same for NYSE. It is worse. Advanced decline started negative, stayed negative throughout the day, and here even up down volume started negative, stayed negative throughout the day with a huge sell off at the close. Whereas the index itself or the ETF itself continued to rally throughout the day. So now when we put all of these insights together, not only the technicals but other insight, it seems the mega caps indeed lifted the market. We have more breadth insights access. So let's look at them. Market level is most important. If we are right on the market, 50% of the work is done, and all I am looking at is color coded insights. Extremely useful market breadth total view, a single page view of what is going on inside the market. Let's first look at these two plots. Growth versus value sharply going up. Small cap versus large cap sharply coming down. What is in favor? Large cap growth. And if I may rephrase, mega cap growth. Mega cap growths are driving the market higher. That's why this candle chart is also going up. However, if we want to know true breadth, we get to know about that from the percentage of stocks above 50-day moving average. That's the one I share in every market recap, but we could also look at, and I do look at, the percentage of stocks above 200-day moving average and also stocks where 50 MA is above 200 MA. How these three plots are moving shows us the true breadth of the market, and another oscillator also shows true breadth of the market is the 3-month new high low. Let's start with 3-month new high low. Same as in last week's stage, in the mid area, neither bullish nor bearish. In fact, it tilted below zero line. So if anything, it is slightly bullish, not oversold, of course, not overbought, of course. If anything, bullish. 3-month new high low is not showing the bullishness shown in QQQ SPY. And let's focus on this percentage of stocks above the moving averages. In fact, Metastock allows us to expand these panels. These are different panels, but I will not try to spend time on that. As you can see, I have many things to cover once again. So let's look at the snapshot I captured. I just expanded that panel. So yellow is the percentage of stocks above 50 MA. It is coming down. It is below the zero line, coming down bearish. Where is the bullishness? That is seen in NASDAQ 100, none. And this is total view, not QQQ, not SPY, not DIA. It's the total view comprising of everything that we see in the market. And that breadth is not only bearish, it is declining. Declining from when? Actually, it is declining from 17th of May. And I picked that date because from that day, not only the yellow line but also the white line started to come down. Okay, and the orange line came down. So that means the percentage of stocks above 50-day moving average, above 200-day moving average, and the ones where 50 MA above 200 MA, all of those breadth lines coming down from 17th May. That is almost for 1.5 months. But the market is making new all-time high. That is a very big divergence, and it is useful, important, aka profitable because we can make better decisions knowing that. Not only that, this total view is showing this week, short-term trading week, has fired two Hindenburg signals, and those of us who follow them, we know that professionals are selling. Even here, I explained earlier, the indexes went up, but many stocks came down. So these Hindenburgs also worked perfectly well. Indexes are being held up by the mega caps. Many stocks were sold during this rally of the indexes, that is mega caps, and now we see the same Hindenburg coming. So this week also there was selling under the hood while the market was going up, and we see one bango, that is irrational exuberance, developed by Mr. Ian Woodward. May him rest in peace. I incorporated that in the market breadth charts. We have reasons to be cautious. None of them are short signals, but these are alerts that professionals are selling, while amateurs are buying, that is Hindenburg, and irrational exuberance, the Bengo. Where did they come from? In this total view, they are accumulation of NASDAQ and NYSE calculations. Let's look at where they actually came from. NASDAQ composite gave the irrational exuberance, and now you see things are starting to fall together. We saw QQQ went up, SPY went up. Okay, we understood that because both are heavily influenced by mega caps. But then we looked at Q index breadth of NDX and SPX, and we saw that NDX breadth was strong, steady and strong, but not SPX. And some of that is probably due to this irrational exuberance that came in NASDAQ. And what came in NYSE, the pocket where traditionally Hindenburg was calculated earlier, two Hindenburgs came in a row. Even the first one was confirmed, alert came here, confirmed, and two Hindenburgs in a row in 1 week, even more reason for caution. So we know where the Hindenburgs came from. Okay, let's close this. What do we know from all this? I looked at the market ETFs, I looked at the mega caps, I looked at the index breadth of all the major indexes, composites, I looked at total view, I looked at also the Q breadth of composites, and the conclusion is this: it is clear that mega caps are driving the market, and as mega caps are heavily influencing QQQ or NDX, some other technology stocks are also going up. QQQ internal advanced decline breadth is also bullish, but rest of the market is not strong. It is not strong, but it is also improving, at least from 1 month to 5-day period. That gives us some hope that there are some buying opportunities, and for last couple of weeks I'm sharing only buying opportunities mostly, and I'll try to do that this week also. But before that, I promise to show how a broadly strong market looks like, not only in terms of major indexes, but broadly strong market. And let's look at one such market. I'm using live data, and the usefulness of this is that when you see that happening in USA market, you or I will be able to recognize that immediately. Let me shuffle out some charts. This is India's Nifty 50. This also hit a new all-time high. This is a narrow market, market cap weighted, narrow market index, 50 stocks. Market cap weighted, made a new all-time high. There is some concerning signal, but of course no bearish setup if we look at the weekly. It made a new all-time high. Now, is this market driven by only mega caps? That answer will come from several places, and I'll show some of those here. This is the NACI, that's Nifty 50 index breadth, advanced decline breadth. Not at all like S&P 500. You can say this is similar to S&P 500 because this is large cap. NSEI, that is Nifty 50, is only large cap stocks. And look at the breadth, whether 1 month or 5-day or 1 day, bullish all along. This is how a broadly strong market looks like. Not only that the technical charts is super bullish, making a new all-time high, internally also in terms of advanced decline, broadly high. But this is again mega cap stocks. There is another, not mega cap, let me correct myself. Nifty 50 is large cap stocks. It has mega caps and it is market cap weighted. If we look at a broader one like Nifty 500, from 50 stock index, now we are going to 500 stock index, super strong. Also made a new all-time high. Again, I would like to confirm that it is not driven by mega caps in India, and that answer comes once again from Q index of Nifty 500. 1 month bullish, 5-day bullish, 1 day bullish, bullish all along the way. That is how a broadly strong market looks like. We don't know that from the index chart. Let me close some of my charts to save memory and bandwidth. Not only the candle charts are bullish, but the internal breadth tells the true story of what is going on in the market. And yes, I am almost at 1 hour point, but I hope you will bear with me because these analytics are useful to come to trading decisions. We still did not look at all the market angles. Let's do that. Let's look at Q edge, sector industry stock breadth. 1 month period bearish, 5-day bearish, just color coding is what I'm looking at. Red is bearish, 1 day bearish. Overall, the market is bearish. QQQ, SPY are driven only by the mega caps for the most part. This is clearly bearish, overall breadth bearish. We are ascertaining the same thing over and over again. If we look at the bucket analysis, this is very balanced between bullishness and bearishness. No signal there, neither overbought nor oversold. So bearish, and let's look back. Let's look back between 1 month to 5-day. 1 month 63% down, 5-day 61% down. So at least a little bit improvement. It is bearish, but improvement of a little bit, a pattern that we have seen earlier in several indexes. So that means there are some stocks that are starting to go up. That theme is repeated in different analytics. And I'd like to finally look at the technical breadth, very unique piece of Q analytics, weekly breadth. It is overall bearish, but not too bearish. 42% of weekly setups are bullish. So there is some reason to look for buying candidates, and I did that last week also. That was weekly period. And daily period Friday, Again, it is bearish across the board, more or less, you can say. But there are some bullish stocks also, and we could look to buy them. Why don't we look for that? Allow me another probably 5 minutes or so. What kind of stocks I would like to buy? I would not like to buy the stocks like the mega caps making new all-time highs. I already said that, because they are overbought and because the stop loss is too far away, risk is too high. I don't like to trade them. In the current market condition, it seems the broad market was weak, but some are starting to go up. We also saw that, because from different angles, 1 month period is bearish, 5-day bearish, but 5-day period is slightly better than 1 month period. So let's look at bullish stocks, and I will do two bottom up analysis in today's session, because I also want to explain how to find stocks in the current market, not just understand the current market. So we have many bullish candidates possible technically, but of course I like to find 360 degrees candidates. I don't want to look at 152 stocks certainly in this session. I'm explaining the technique. I will do two bottom up analysis. One is for stocks that are at price extreme low. Another I will do for stocks that are at price extreme middle. You could find buying candidates at price extreme high also, but I will not do that analysis. Let's look at price extreme low. Now I am left with 24 stocks. These are at price extreme low. Remember the stocks I bought earlier at price extreme low, like ACAD, ACAD, EXEL, and Vodafone last week. Those are like the stocks of this list today. Those were then, of course, but I don't want to look at 24 stocks. I'm going to create a fundamental scorecard of that using QVital, and you may notice as usual how smoothly I am transitioning from one program to another program. Let it get data from Refinitiv, calculate the scorecard. I can have a sip of my coffee. Let's look at the scorecard of the stocks. Now, there are different ways I can choose fundamentally strong stocks. These are at price extreme low. So let me, for this session, focus on dividend yield and only highlight the stocks having at least 5% dividend yield or more for this analysis. And let's see what trade setups they had. These are the setups, and instantly, because of the color coding, I noticed there is only one stock with a breakout setup at price extreme low. Why don't we look at this stock, MTN? Now is the time to create a single page scorecard of the stock. We know it is high dividend yield, but let's look at the full one page scorecard. It is a value stock, and it also has earnings growth. Earnings growth is accelerating. I like that. Undervalued stock with some earnings growth, I see insiders are buying, has a 5% dividend yield. And in this market situation, I explained in the previous market recap also, I would like to focus on stocks that are making consistent profit in terms of earnings share. All those are in favor of buying this stock. 60% of peer stocks went up, leisure facilities industry. As far as fundamental scorecard is concerned, it's telling go ahead, buy. But I'd like to also see its industry relative scorecard. In itself, the industry is strong. Fundamentally, in itself, it is strong enough to buy. But let's look at its industry scorecard, that is relative score of the industry. And instantly, I see it is one of the top 20%. Great, I like to buy them. It is also one of the top 20% in terms of acceleration over today. I like to buy them. Acceleration shows some kind of turnaround candidate. Strength shows it is currently very strong. So technically I have to find out. It has a breakout, but let's look at the actual chart. MTN. Okay, it has something very attractive, something not so attractive. Let me share something not so attractive part. It broke out of one trend line resistance, but not so attractive is because there is another trend line resistance not very far. The attractive part is that it hit jump thrust low, price extreme low, and immediately after that created big move up 3, tried to pull back little bit, and on Friday created a bull release signal and had a breakout. So this pattern has proven to be extremely reliable in a fundamentally strong stock, and this stock is fundamentally strong. As I explained earlier, it is not a good idea to buy when trendline resistance is nearby, not a good idea to short when trendline support is nearby, but exception is always there, like Vodafone, where it had high dividend yield, 10% plus. MTN does not have 10% dividend yield, but 5%, not too bad. So I did not buy it. I didn't find it on Friday. It's opposite time zone for me, but I'll keep an eye on this stock. One way to buy it will be to buy at breakout point. Another way to buy it will be what I did in case of Vodafone. If it gives me the chance to buy at the watermark support, the dividend yield of 5% is good enough that if it creates a bullish shape candle at the watermark support, I am willing to buy it. If it breaks out of the trendline resistance, I am willing to buy it. But in between that, now it is inside a range created by watermark support trendline resistance, right in the middle of the range. Using daily template, I am not able to buy it. If I want to buy it on Monday in the middle of the range, I will have to switch to intraday fine tune chart. But this is certainly a stock I am going to keep an eye because of this very attractive pattern of jump thrust low, price extreme low, big move up 3, and just have to see where I buy it, at the support or at the breakout of the resistance. So that was one workflow, and these are different workflows. So I carried out one workflow looking at one stock. There were other buy candidates that was at price extreme low, and I intentionally looked for stocks with high dividend yield. But let me do one more time another workflow, another investigation you could say, and this time I clicked the yellow paintbrush, that is stocks at mid price level, not at low, not at high. Now I have 71 stocks. I'm not going to look at all of them. I create a scorecard. That is how and how I find trades, 360 degrees trades. That's why my success rate for swing trading is, I think, higher than many others, because I look at all the angles, but I am able to carry out that analysis quite quickly and unambiguously. That unambiguity is very important. Time for a sip of my coffee. I could look to find many other stocks, but I promise I will stop after this investigation. Now these are not at price extreme low. So I could look at dividend yield, but I am not going to do that. Let me carry out different analysis. Remember these smart filters. They help me quickly look at the strongest fundamentals first. Diamond. Excuse me. Diamond strongest. If I don't find buying candidates there, 3 star and then 1 star green, or I could use the other categories as well. Smart filter. Let's start with diamonds. Only one. And I can see many things here. Dividend is there, but not high enough to buy only for dividend. That's fine. Let's create a one-page scorecard of the stock. I'd like that. The stock is YOU, price extreme middle, and immediately I like the stock. Unambiguous color coding, undervalued stock, great earnings quality, a short squeeze potential, very high earnings growth, accelerating earning growth, turnaround candidate in terms of earnings growth coming down and then increasing again, has some dividend yield, consistently profitable. 70% of peer stocks went up. So in itself, I can buy this industry stock, application software stock is YOU. But let's also look at the relative industry score, just one click away. Great. Just one glance at it. One of the top 20% strongest industry. So industry allows me to buy, stock allows me to buy. Let's go back to the stock. This does not have high enough dividend yield. Last time I did not check the seasonality of MTN. You could do that. I'll not go back to save time, but let me carry out the seasonality analysis of YOU. And this does not have enough history. This is a relatively new IPO, only few years of history, but based on that few years of history, I have to say 4 years of or 5 years of history is not enough to make seasonality statistically reliable. Not at all. Just 4 or 5 years. It has to be at least 5 years. 5 years not complete yet, you can see that. But if anything, it is not bearish, I must say. In fact, as far as calculation is concerned, for this 4 5 years, 4 point something years, yes, it has 100% bullish seasonality. So that may help a little, but seasonality is not key to my trading decisions. It's good to have. So far, fundamentals and industry score are fine for me to buy the stock, but let's look at the stock's technicals, YOU. Remember, I looked for stocks at price extreme middle. When the stock was here, I could find it as a stock at price extreme low with a bullish flow setup. That would be probably the first possible bullish flow setup when price had also regained the watermark created by the bullish headwind after creating a false downside breakout. But that was then. I did not find the stock then. Now it is at price extreme middle and it has a flow long setup. Weekly is looking bullish. However, there is a trendline resistance. So I may watch for it to break out of the trendline resistance and buy it. Another approach will be again similar to Vodafone. If it gives me a chance to buy at the trendline support with a bullish candle at the close, I will prefer that, of course. That will be nice to have. The stop loss will be very narrow in that case, below the low of that bullish shape candle if it happens. If it breaks out now, my stop will still be below this trend line support. Bit far away, I may try to buy it using real-time fine-tune chart if I see it is continuing to go up. So APTV, I am going to keep an eye on, identified in last market recap. MTN, 5% plus dividend yield, I may buy it before other stocks if all of them are starting to be bullish. And YOU also I am going to keep an eye. MTN has this attractive pattern of jump thrust low, price action low, big move up 3, and YOU is already starting to go up. You know, if the trend line resistance was not there, you would say it's a stock in stage 2 uptrend. If I change to momentum chart, in fact it was inside a squeeze, then went up with Mobo breakout from a squeeze with multiple kahunas. That was the low. That is when the bullish flow setup came. And now you may say it is having higher high, higher low above multiple moving averages, major moving. So it's in stage 2 uptrend. That's what I mentioned earlier. You may buy, I may buy using different instrument strategies and in different categories of stocks, undervalued stocks, high dividend yield, or stocks with high growth, depending on how we are looking at the market. MTN is in one category, high dividend yield, undervalued. U is in another category, not so high dividend yield, but high growth. There are different times to trade those, and we are able to identify those unambiguously using the Q analytics as I explained. If you carry out the bottom up or the top down analysis using Q, you will most likely find other buy candidates that are fundamentally strong in strong industry and at or near a low risk buy point, but I will not try to look at them more. Already past 1 hour time. Let me end today's session here with a thank you. Thanks a lot for joining. I look forward to seeing you in our next session, most likely next weekend. Have a great weekend. And as I always say, as these live examples show, there is no reason not to make some profit from the market. Trade profitably. Thank you.